Hey everyone, welcome back to Corporate Decoded, the place where we uncover the hidden stories in company filings. So you don't have to tonight. We are looking at a company that seems to be playing a game of financial musical chairs, trying to keep its stock price from falling off the cliff. Alright, so what we have here is a Form 8K filing from Intelligent Biosolutions Incorporated. This is basically a report that companies have to file when something important happens that investors should know about right away. And the big event reported here is that Intelligent Biosolutions Incorporated received a notice from the NASDAQ listing qualifications department. This is kind of like a warning from the stock exchange itself. The reason for this warning is pretty serious. The company's stock price has been below $1 for 30 consecutive business days now. Why is that a problem? You see, for stocks to be listed on the NASDAQ capital market, they need to maintain a minimum bid price of at least $1. This rule is there to ensure that the stock is generally considered more stable and has a certain level of investor confidence. So what does this mean for the company and its investors? Well, NASDAQ has given them a grace period of 180 days to fix this problem. This grace period ends on the 15th of June 2026. The company can regain compliance by having its common stock close at $1 or higher for at least 10 straight business days during this period. But here is where it gets a bit more complicated. If they don't manage to get their stock price up to that $1 mark by the deadline, they might be eligible for an extra 180 days. But there is no guarantee they will get this extension. They will need to meet other listing requirements like the market value of publicly held shares and all other initial listing standards except for the bid price itself. Now, this whole situation is a serious concern because if a company cannot meet the basic listing requirements like keeping its stock price above a certain level, it can lead to the stock being delisted from the exchange. Delisting basically means the stock will no longer be traded on NASDAQ, and that usually sends investors scrambling. To try and get ahead of this problem, the company has taken a drastic step. They filed a certificate of amendment to do a 1-for-10 reverse stock split. This means that for every 10 shares an investor owns, they will now have only 1 share, but the total value of their holdings should theoretically remain the same. This is often done to artificially boost the stock price. Per S-Hair. So after the reverse stock split, which happened very late on the 15th of December, the company's stock started trading on a split adjusted basis on the 16th of December. The hope here is that by increasing the price per S-Hair through this split, they can avoid delisting and satisfy NASDAQ's bid price rule. This filing is signed by Spiro Sekiris, the Chief Financial Officer of Intelligent Biosolutions Incorporated, so he is the one officially confirming all this information. Now, looking at the core of this filing, it is essentially a distress signal from NASDAQ. Their stock price is too low. The company is trying to survive by doing a reverse stock SP. Lee. This is a move that, while sometimes necessary, can also be a sign of underlying weakness. Many companies resort to reverse splits when they are struggling to maintain investor interest or when their market capitalization has shrunk considerably. The risk here for investors is that a reverse stock split is not a magic wand. It does not fix the underlying business problems that cause the stock price to fall in the first place. Often after a reverse split, the stock price continues to decline if the company does not improve its fundamental business performance or generate positive news or earnings. Intelligent Biosolutions Incorporated, we know very little about their actual business from this particular filing other than their stock is in trouble. So for investors, their past performance and future prospects are key if the company's core business is solid and can improve its financials. Then this compliance issue might be a temporary bump in the road. However, if the business is fundamentally flawed, then this reverse split is just delaying the inevitable. The big question for Intelligent Biosolutions is whether this reverse split will be enough to keep them on NASDAQ, and more importantly, whether they can actually improve their business to justify a higher stock price in the long run. The company has a deadline and a strong incentive to turn things around, but the odds are admittedly stacked against companies that have to resort to such measures. Alright, that is our breakdown of Intelligent Biosolutions Incorporated filing. What is your take on this reverse stock split and what it might mean for the company and its investors? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate deep dives. Do not forget to check out our Discord community linked in the description if you want to discuss these filings further with other like-minded individuals. Thanks for watching, and we'll see you next time.